So, crypto today have experienced quite a hard lesson. Crypto got liquidated, or actually, the longs got liquidated by about $584 million in this 24-hour only window. And the total crypto liquidation reached $657.9 million over the past 24 hours, with the Ethereum accounted for the bulk of the total liquidation. And roughly around 106,371 accounts got hit, with long positions reaching about 89% of the total liquidation. This meant that predominantly the longs got wrecked. Why? Obviously because of the increase in geopolitical tension that I will explain later on in this video, so stay tuned. Okay, so Ethereum took the heaviest hit, right? Around $256 million got wiped out, while Bitcoin recorded around 180 or $181 million in liquidations. And the single largest liquidation order occurred in BitGet, which is about $28.49 million got wiped out. In essence, the situation in the market is not looking great, and also Bitcoin slides under $77,000 as amid bond sell-offs. Now, if we look at the 10-year Treasury yield, it reaches 4.63% on Sunday night, and it is up 70 basis points since the Iran war began. And why does it matter so much? Because bond yields, or US Treasury yields in this matter, affect the entire financial markets. And also, with US mortgage rate nearing 7% and the odds of a rate cut this year collapsing to 2%, the bond market is not looking great right now. Because they hit bond markets, we are seeing a hit in risk appetite, which caused Bitcoin to fall down. And this is the reason why is because obviously the escalation in geopolitical tension in the Middle East. Now, UAE's nuclear plant got hit around yesterday, and it is quite interesting to say the least, because the United Arab Emirates Ministry of Defense says that there are 3 drones attacking the nuclear power plants, while 2 got successfully intercepted. The third seems to hit a generator near the plant. So not the plant itself, and I do believe that even that if the drone got a single drone hit the radiological protective area of the nuclear power plant, it won't do much damage anyways because of how thick the concrete are at that point. Also, the numerous safety barriers to that will need to be breached from that explosion to reach the nuclear reactor. And even if the nuclear reactor got damaged, the controller can just hit the red button, the scram button, and the nuclear reactor will just stop producing power and producing heat, and all is going to be well. But what's interesting is actually the drone were launched from the western border. Now, if we look at the map, I believe that the western border is not Iran, right? Iran is about on the eastern side of UAE. So, who is this western border actor comes from? Now, I believe that probably it's Hezbollah, right? Because Hezbollah is Iranian proxy, and it's situated to the west of UAE in Lebanon. But because the Emirati officials haven't attributed the blame to any particular faction, we can only guess. Well, that's the best we can get. But because of this increase in tension, we are seeing more fears of rising oil prices. And obviously, rising oil prices is bad for inflation. This inflation price risk or inflation price scare actually affected the probability of a rate cut this year. If we look at the 17th of June 2026, so next month rate cut, people are expecting to have no change in rates. And actually, if you look through the months of 2026, even to December, it seems that people are still thinking that this year will have no rate changes at all. And even if a rate change happens, people are actually thinking of a rate hike. So not a rate cut, a rate hike of 25 basis points, as you can see from my cursor here. That meant that it's not looking great for risk on asset like crypto and stocks. If we look at the January 2027, you can see actually the probability for a rate hike actually increases, and in March we are seeing that the majority of people actually believe that we need to have a rate hike before March. And even if we don't get before March, we need to get it in March, right? At least a 25 basis point rate hike. So overall, people are in risk-off mentality. They just want to be not near risk on assets, right? And this actually happens because of, by the way, this is my second recording because I forgot to record. That's why I already have this green marker. But let's erase this green marker and I will explain this flowchart from the beginning. If you look at this, the war risk actually went higher, right? Because of the UAE power plant hit, etc. And although we don't know if Iran is to be blamed, but again, it's in the region, so people are just afraid of, escalations, right? Also, because of this war risk went higher, oil prices will stay high, right? Or actually probably get higher. And if this stays high, then inflation kept rising, right? And if inflation kept rising, well, investors wanted more bond yields, right, to compensate the rising inflation. So I draft up like 3 examples here to explain why investors wanted more bond yield to compensate. The first is the normal one. So inflation is 2.5, bond yields is 4. That means the real yield is around 1.5%. If, say, inflation got increased by 1%, that means that the real yield actually decreased to 0.5% only. But that means that the investors got less of money and they don't want it. So they want a higher bond yield than say 5%. And that meant that the real yield comes back to 1.5%. That's basically it. So that's why that lower yield bonds or current bonds drops in value because they're less desirable because of this real yield component. So loans that are using these bonds as collateral have a higher LTV now because obviously your collateral falls down in price, so your debt to value or your debt to collateral ratio actually increases, right? Some might need to repay their debt, causing them to sell assets. This is not good because obviously first going to be sold is crypto because it's 24 hours, 24/7, right? Next probably will be stocks because they are quite liquid, etc. So they will probably need to sell their assets. This meant that there is lower appetite for borrowing and lower growth because, well, people don't really want to grow in this, uncertain times. And this meant that it is a risk of behavior. And this is quite bad for Bitcoin, obviously, and it's reflected in the charts, right? We actually, in May 9th, we reached 82,500, and we dropped to 76,000 in a couple of weeks. But in my personal opinion, it is more of a we hit the 200-day moving average and got rejected from there. And actually, we are quite right now probably testing the 200-day and the 50-day moving average here. The price will probably test the 50-day moving average here, and probably also the Fibonacci number at 74,000. Maybe we probably can stabilize in 74 to 75,000 range for a couple of days before we, see whether the news is bearish or bullish in the future. But I think that we should know that, is it the continuation of the sell in May event that plagued every bear market in the history of crypto? Well, it seems to not be the case as of this bear market or as of today, right? We don't know if May close and there's a big crash in the future. But if we look at last bear market, which is in 2022, you can see even in April, we already got a minus 18% drop. While in May, we have a minus just 17% drop. While in June, we got a minus 37% drop. So it's a massive drop. But we are seeing actually in April right now, we have a positive price, right? Because the start of April is around here, while the end of April is here. So we are actually increasing in price in April. So right now it's less bearish, and I don't believe that we are actually going to experience the sell in May event. But personally, I'm more cautious in saying that this is the end of the bear market. Because why? The uncertainty in global geopolitics is very high right now. Oil prices keep high, very high. This causes inflation, obviously. And even if the governments can lie through their teeth, well, people can experience it day to day, right? So because of this, people's buying power will obviously decrease, and people will start to think more risk off, right? Actually, we already experience it right now, but this is for the financial people, right? Non-financial people probably haven't experienced it yet, but if we continue to have inflation after inflation after inflation, they will feel it one way or the other, okay? When their Big Macs grow twice in price, thrice in price, quadruple in price, who knows, right? But also, because of this, people appetite for investing in risk assets got hit quite dramatically. And that is actually reflected in crypto prices and also in YouTube views, right? Because obviously people are not looking at crypto views or crypto YouTube views. But thank you guys for watching this video, right? Because this is a small channel and I hope I can continue to give you guys the best info that I got. Obviously, I'm sorry for my English. English is not my first language, but I hope you can bear with me and understand what I'm saying, okay? Anyways, I believe that Bitcoin will still have a bear market until Q4. Why? I say Q4. There is, I think, a couple of reasons, but first reason is because of seasonality. Bitcoin has historically bottom in Q4, and if we look at the bear market or the top of the bull market last year, it's in Q4. So you don't fix what is not broken. So I expect somewhere in October and November we will have a bottom. But also, I feel that the pain of this drawdown is not that much, right? We are not seeing roughly, if we look at, if we take a look at this, wait, let me find the price range. If we take a look of the all-time high back then to the low, let me precise it. It's 77.5%. Now, if we take a diminishing return, then probably around 70% is what we expect from this bear market, right? If it's 70%, then we are actually probably going to hit $38,000, 38 to 40 something thousand dollars. And in my personal opinion, we probably can reach that point, right? Because we reached it in 2022. And I think that diminishing return is still going to apply, but it won't apply that massively, that it cuts the projected Bitcoin losses from 77% to like 50% or something, right? So in my personal opinion, we still have a long ways to go. Obviously, this is not financial advice, and if you want to see financial advisor, you go find one outside, not me. Okay, but I feel also from the uncertainty in the market, how the people expect actually a rate hike towards the end of this year and the early next year. I'm not seeing a bullish case for Bitcoin. Sure, there is bullish news everywhere, more integration, more ETFs, more etc. etc. But if the macro is bad and the capital actually is not entering crypto, you have the good news all day. But the price won't grow because prices doesn't increase because of good news. Prices increase because people buy, or actually the capital flows into the assets. Sure, good news can bring people into the asset by making them to buy the asset, but it doesn't directly correlate to an increase in price. That's why you need to keep in mind that although the news are good, although there is like innovation, there is like etc. etc. Where the money moves is what matters at the end of the day. And to my, in my opinion, people are moving into bonds, okay? People are moving into cash. People are not looking forward to, risking anything because of the uncertainty due to the geopolitical tension, right? What do you guys think? Right? Whether you think that I'm correct, wrong, whatever, make sure to put down your thoughts in the comments down below. And if you like this content, make sure to check out my other content, as probably you want to check how the Bitcoin has actually quantum risk, right? Here, or whatever I put the end screen is. Also, guys, stay safe, stay curious, and I'll see you guys next time. Make sure to like and subscribe.